What's going on, guys? It's Kyle. Welcome to the Big Money Mindset 2 Rocket Fuel channel. And in today's video, we have a highly requested video. In this video today, I'm going to be going over some call options tips, how to buy call options, what call options to look for, the do's and don'ts. I'm going to give you as much information as I can and understand that this section and topic is going to have multiple spin-offs that I'll be going over in the next couple of weeks. So stay tuned for those videos as well. Be sure to subscribe to the channel if you feel like any of this information is useful. I'll be going over, more call option updates in the near future. Once again, I want to say congratulations to everyone that signed up for the Patreon. The link is in the description. I give out weekly call options every Sunday before the market opens on a Monday. We have over 900 users inside of the Patreon, and a lot of people are very satisfied. So let's get into it. We're going to be going over the NEO stock because this is a company that I've been purchasing call options on for the past couple of months. So we'll take a look and see how those are going. Alright guys, so I do prefer to play call options inside of the Robinhood account. It is very easy to learn. This is what I've been teaching people on as far as, buying call options. I'm in a couple right now, NEO, HCAC, IPOB. We're messing around right now, a little bit of money in the market. I have more money in my TD Ameritrade. I have more money in Webull, I think right around $60,000, $70,000 currently. So I'm going to take a look at the NEO option calls that I did recommend a few months ago on the Patreon, and this is a company that we have been killing it on because we're in so early. That's what it's all about, is getting in at such an early time frame. So these call options right now are significantly up even after the like $12 pullback from the $56 high. So right now we're up nearly 565%, and these call options, I've already sold some of them off for $5,000 profit. I had about 7 contracts in that $22 call range. So right now what we will do is we'll go over some tips on, how to buy call options and, what to look for when you're entering. So this is going to be the call options tips. And, the first thing we want to go over is terminology. An option premium is the current market price of an option contract. It is thus the income received by the seller, the writer of an option contract, to another part. So when you're purchasing a contract, someone currently owns that specific contract, and they are offering to sell the contract to you for a specific price. You then become the owner of that specific contract, which will have an expiration date at the end of the contract. An option contract consists of an opportunity or the right to purchase 100 shares at the strike price if exercised. That option contract will go to $0 if exercise is decided, and you will have to pay for that strike price times 100 out of pocket. And I will give you an example of my NEO contract. Volume refers to the number of contracts traded in a given time frame. So that's just the number of, option contracts traded back and forth. Open interest is the number of contracts that are active or not settled. So basically, that's how many contracts are in the market right now available, but they have not been settled or finalized at the expiration. We'll also be taking a look into in the money, at the money, as well as break-even purchasing price of contracts. So those are the terminologies that a lot of people have been asking for and want to know. So those are the things that I'll go over as we're looking at the NEO call options. All right, as you can see right here on September 10th, this is a couple months back. This is when I decided to take an option contract with NEO. I purchased 7 contracts, and these contracts premium price at the time, they were $3.50. That was when NEO was hovering right around that $20 range. I saw NEO had a lot of upside coming, and that's why I decided to take a position. So these contracts, they were $3.50 per contract. Remember, a contract consists of 100 shares, okay? So all you have to do is times that contract by 100. So you're purchasing for $3.50 per share because it's a premium value, because you can potentially lose if your contract does not go in your favor. So you just times that by 100. So that's going to give you $350 per option contract. So I did purchase 7 contracts, bringing me to a total value of $2,450. I did sell some NEO at the run-up when NEO gradually moved itself into that $50 range because I saw a lot of opportunity with the sales increases. This contracts did go to a total value of $27.65 per option contract. So basically right here, you can see I sold 2 contracts right here. It was a sell for these $22 strike price calls. I sold 2 back into the market to a buyer who purchased my contracts off of me for $2,765 per contract. So just off 2 contracts, I already doubled my money for the $2,450 investment. So I doubled my money selling those contracts when NEO was right around that $47 range. Okay, so that's just a little example of how contracts work when you're bullish and the stock moves very aggressively. So right now, those remaining 5 contracts, I still own those. They are still in the market, even with NEO coming down, because I purchased these contracts so early at such an early time frame in that $20 range. These are still worth a lot of money because NEO is up nearly $25 from its $20 stock that I purchased these contracts at. So these $3.50 contracts are still currently worth, I believe, $23 right here. This is the premium price that they're going for, $23 a pop. And understand, I did sell at the $50 stock price of NEO, so they were worth about $2,700. So right here, you can see these contracts do have an expiration date of January 15th, 2021, okay? So they still have a little bit of time frame left on them, right around a month. And these are, the value that they cost me, are $1,750 for the remaining 5. These are still at a market value of $11,700. And as you can see, that's a total return of $9,900 plus the $5,000 that I've already sold. So that's an insane investment on a call option for only $2,400 investment. I mean, guys, this is absolutely insane. So we're going to take a look at some NEO contracts right now inside of the market, just so I can give you guys some detail if you were to enter NEO right now. And understand, these contract prices are going to be a big difference from when I purchased, because the stock has moved so aggressively. So we're going to go to view all options, and right here, these are all the options that NEO has available right now, and we can see that they have a massive amount of call options. Right here, we got December, January, February, March, April, May, January 2022. So understand, the further the expiration time frame, the more expensive these call options are going to be, okay? So the further out, the less risk you have. So they're going to get more and more expensive. As you can see, these December 11th calls are literally a penny for a $66 strike. I mean, they're saying for NEO to hit a break even in that $60 range, they're charging 1 penny to 2 penny because they believe it's physically impossible to move in the next couple of days or a day. So as you can see, as you go down lower and your break even price and your strike price become lower, the value is going to be increased for the premium because you have a greater opportunity of successfully getting in that call option and making money. So right now we can see the lower we go, the more expensive these get. And you have to understand, these are very risky because there's not a lot of price movement. You want to get into a call option with more value right here. I've been recommending on my Patreon entering in like March or April calls, and these are going to be some big money just because NEO has moved up so drastically since the $20 range. That's nearly 2.5. So right now, this is what you would call the at the money call option, because NEO's at $45 and this strike price is $46. The break even is $57. This is called at the money. And if you go out of the money, that's going to be a more aggressive call option. So out of the money is further out of the strike price or the share price of the stock. So a out of the money call option for NEO is going to be a higher risk option. So they're willing to pay you less and less the further you go, okay? As you can see, the higher the strike price we go, the cheaper and cheaper they get. You can see we bring it back down near the strike price of the call option, near the stock. Like the stock price is $45 right now. They get more and more expensive. And in the money call options are less risky. So those are going to be the highest price for a premium of entering that call option. So right here, you can see you're already going back down, and the call option is becoming less and less risky. They're going to charge you more and more money because this is less risky, because NEO has already, matched these prices over time. So you got to just, find that sweet spot. And I can go over with you, inside of my Patreon, I go over, exactly the type of opportunities I see, and I show my Patreon members, what to look for on getting in on a call option at the perfect time frame. And once again, open interest and volume you want to look for, okay? You want to look for a contract with high open interest and high volume because you want to get in and out of that trade whenever you want. So basically, the higher the open interest, the more people are purchasing those calls and the more outstanding contracts there are. And volume means, these are being traded rapidly. So I like to look for open interest, usually over 5 to 600, and volume needs to be right around over 50 to 100, just so I can make sure there's a lot of opportunity to get in and out of that contract whenever I want to. Reasons to buy call options, okay? I get a lot of questions about call options, so I'm going to be going over my game plan with you guys of what I like to look for, okay? So reasons to buy call options. We have company mergers, blowout earnings, increased sales, vehicle releases, companies undervalued, future growth upside ahead, notable comparisons to similar companies in early stages. These are multiple opportunities of why you want to enter call options. Mistakes I see, because guys, I do run, one-on-one portfolio management. I've turned multiple people's portfolios around, and pretty much, I see a lot of mistakes being made. So this is what I'm seeing day in and day out. Buying call options on penny stocks, crazy volatility, pump and dumps, okay? These are the highest risk. People go broke in a matter of days entering these types of call options. You want to stay away from penny stocks. It's okay to, purchase some regular stocks on a penny stock you believe in long term. There's going to be a lot of ups and downs, but call options, it's going to be very, very volatile. Call options on healthcare, medical, or medicine, these are very, very risky as well. I've noticed a lot of people lose a ton of money playing call options on penny stocks and medical healthcare options as well. Buying crazy in the money, there's really no reason to buy crazy in the money unless you plan on exercising. Remember what I said with exercising. Exercising pretty much means, your contract is going to go to zero once you're in the money, and you're going to go back in time and purchase that stock at the specific strike price that you placed your call option on. And remember, this can be a significant win long term in a company that just does not stop growing. So remember, those call options I purchased with NEO, I purchased at a $22 strike, so I can go back in time and get those 100 shares for each contract if I please. And pretty much I do plan on exercising a couple of those call options because I expect NEO, once that NEO day comes rolling around, this stock is going to move its way back in to that $60 plus range. So my $22 calls or strike prices, for those stocks, they're going to be worth a lot of money even in the short term. And if NEO goes to that $100, $200 range, that's where you make a killing, guys. That's where you get very successful, when you get on these growth stocks at such an early time frame. So once again, buying crazy in the money, I don't recommend it. Also, buying crazy out of the money, I also don't recommend it as well. I also see people buying the cheapest options available. Like I said, those ones people think they're going to hit a home run, purchasing $1,000 at that penny stock range on those December calls that we started with. Those are very, very risky because there's not a lot of upside in the short term because there's not a lot of expiration left on those call options. So Also, I see buying options too many years out with no volume. So someone might want to get in and out of a trade and there's no volume because they're buying 2 years out. That's another one I see big mistakes a lot of the time. Not diversifying into multiple options. This is a big one. I see a lot of people, just going all in on one company with their life savings. This is another way to just get absolutely ripped to shreds inside of call options. Not having patience. You're buying a call option, you're hoping on for that company, for these positives, to happen over time. And sometimes it takes patience. And a lot of people sell for losses. Some people, can't wait more than a week or two. Guys, I sit in call options for months in and months out waiting for these bad boys to move. And I'm hitting 90% of the time. And my Patreon members are absolutely killing it. We have 900 plus users in there. And there's a reason why these people are rolling with me, because I'm giving them the best possible information I can. Once again, day trading options, this is very risky. Some people do well, but 95% of day traders are getting smacked with call options all the time. I see it. People get, their portfolios blown up because they're trying to day trade and make quick moves when the stock market goes flat. Using options with margin, this is very risky. I only recommend to risk the amount of money that you have and you're willing to lose with call options. You don't want to be gambling with, loan money and margin money, because if a company goes south, you're going to be owing a lot of money in a very short time frame with that margin. So that's another thing to look out for and avoid. What you need to be doing, this is what I recommend in my Patreon, guys. This is the information that I give to people. Diversifying into multiple call options. Let's go with $1,000, for example. In my personal opinion, I would be looking for companies, a couple months out at a fair value, slightly out of the money, not too far, like right near the company's stock price. And I would be diversifying to at least 3 companies, okay? That's 3 contracts I would be getting for 3 companies, hopefully right around that $300-$400 range. So that's my recommendation. Don't go all in. Always diversify into multiple call option companies. Finding that sweet spot on time frame, on expiration for stocks to move, in my personal opinion, what always works for me is that 2 to 6 month range. Great value for your buck. I want you guys to remember that number, 2 to 6 month time frame. You're going to be getting the best call option opportunities with your money entering. You're going to have tons of cushion. You're going to have tons of upside, and you want to pay that bigger premium up front to give these options great opportunities to move. Guys, I'll take a look at other call options I'm in just to show you guys, how these call options are doing, even in the short term. Some of these I just entered a couple of weeks ago. We could take a look at the IPOB. This is an open door company I entered. And guys, I've been buying the heck out of options on this one in that $20 range. You can see the stock's down today, but we're still making some pretty good money. Right now, I entered 13 contracts. We're up almost 100% on these contracts. Look, right here, you can see exactly what I'm purchasing, guys. I'm buying slightly out of the money and right near the stock price when it was at that $20 range. We got the 25s and the 20s, okay? Long expiration, check it out. February, May, you want to pay that upfront premium, okay? Of course, some people got lucky entering December, January calls because the stock's moving. But guys, you want longevity in call options. You want to limit your risk. So big money on these, big money on the NEOs. The NEOs we're developing. The NEOs still have tons of upside left. And guys, this is what I teach inside of my Patreon for you. I'm out here looking for your best interest. So sweet spot, 2 to 6 month time frame. Find stocks that have lost interest but are still significantly undervalued from upside potential in the near future. So guys, that was the NEO stock. It moved up hard from that, $2 to $5 range to that 20, and it was just hovering at 20. And I was just like seeing it for about a month. I was like, it's time to play some call options. This company has tons of upside, tons of good news coming. Boom, 20 to 55, just like that. $16, $17, $18,000 in the profits just with a $2,000 investment. So this is what I'm talking about, guys. There's another call option I'm entering, HCAC. I'm up 100% on that one. You just want to look for upside, guys. You don't want to, chase. Don't ever chase a stock on a massive spike entering call options when they go up 10, 20%. You will get burned trying to place a call option on those. I assure you, I've seen it happen multiple times. EV tech is the future. These will be the companies with the highest upside for the next 5 years. These are the companies that me and my patrons have been killing on call options. You also have to balance call options with your long-term growth stocks to continue building over the years. You don't want to go all in on call options. You want to build a growth stock portfolio as well. And guys, I have over $35,000 in stocks, in Webull and TD Ameritrade that I'm growing rapidly. So that's what it's all about, diversifying. And I'll go back and I'll show you guys one more time. Let's say we're entering a call option on IPOB right now, okay? Let's take a look. So you're just going to go to Trade IPOB Options. And as you can see, the December 18th calls are close to expiration. So if you believe in this company, you want to just give yourself a little bit of time frame. So let's just go with some February calls, okay? A little bit of time frame. As you can see, the stock's moving. So right now, these are going up, these 25s that I've been purchasing. So you want to look for, an option slightly out of the money if you're really bullish. So right here, this one has low volume, okay? It has good open interest though, so that's a good sign. People are buying these calls. So let's take a look. We click the option, and right now, that's going to cost you $5.90. You hit continue, and you can see 100 shares of each contract. Remember, that's what I'm saying. So you click 1, boom, 610. You click 5, boom, 2,950. So these are big money, but understand, if these go south and they do go in the negative towards your expiration, you're going to be down in the money. I always recommend, selling for a loss at that 20% range. Negative 20% equity is when I recommend selling. So I hope this helps you guys, dramatically. I'm going to be going into more detailed of, purchasing call options when I get my whiteboard in. I'm going to have a whiteboard, so I'll be showing you guys more details as well. This is just a early stage of, call options tutorial that I wanted to show you guys. And if you made it to the end of the video, I want to say I really do appreciate it. I enjoyed doing this video for you. I'm going to be going over more call option tutorial videos, just going in more in depth each time so we can learn more and more about call options and how to play them safe and correctly. Once again, I want to say congratulations to everyone that signed up for the Patreon. The link is in the description. We've been making an absolute killing these past couple of months. There's a lot of upside inside of the Patreon, a lot of opportunity, and you can click the link and you will see an Instagram link. You can go to that Instagram. All of the reviews are listed on the Instagram, so you can see how people have been doing these past couple of months. So it's just been a fun ride, and I'm really happy with the feedback I'm getting from everyone. Once again, this is Big Money Mindset. I'm Kyle. You have a great day.